Adam Parker, welcome back to the show. It's been a while. Want to hear your view on the market. I think you're bullish on equities. Why? What's driving that view?
Pretty easy. You know, you always sound dumb when you're bullish, Sarah. And for me, you can always sound smart when you're bearish. But why am I bullish? It's really four things. Earnings are growing. The economy is growing. The Fed's accommodative. And I think what they did last week was bullish. And there's a lot of fiscal stimulus. So that's like the golden quadrangle of bullishness. Why with that?
Josh Brown, in terms of that kind of slippage into the close, what sectors are you most focused on now, looking forward for the rest of this year?
So I don't necessarily play that game where I predict what sector will be best. I'm not good at it, but when I look at consumer discretionary, the XLY, just look at the top 20 holdings, it's really hard for me to picture a scenario where these aren't at least among the best performing stocks of the year because of what I think about the state of the consumer. So when you look at what's in there, it's like Tesla, Ford, GM. A lot of people don't know that. Amazon is 25% of that index. I think Amazon's about to explode to the upside, make a new high any day now. And then you look at some of the other names, like Chipotle is big in there. And these are all companies that I think will be the biggest beneficiaries or among the biggest beneficiaries of a consumer that, quite frankly, is emerging from this recession unlike any other period of time that we can go back and start. It really doesn't exist. So I think it's a very unique situation, and I think you want to be in the names that are going to benefit the most. So to answer your question in a very straightforward way, I would be thinking about activities and products that you know the consumer wants to pay for.
Adam, it sounds like you agree with Josh on the bullish view of the economy and the U.S. consumer. My only question is, and then everyone talks about the high savings rates, is that a reason enough to be bullish on the consumer? What about the fact that a lot of the fiscal stimulus was front-loaded and will fade? Is that not a risk?
Look, at Trivariate Research, we build models to predict return within the discretionary sector. We think it's a great time to be able to pick winners from losers. So I'm not maybe as overall optimistic because while he's right about the big stocks that are in there, there are a lot that get hurt by rising wages or rising input costs. So I think it's a great stock picker market. You'll see the Nordstrom Missing go down. You'll see others beaten go up. I think you can create dispersion. It's a good time to do that. I'm a little bit more cautious, probably I would say more market weight on that group. To me, and I know you guys just had a debate about this a few minutes ago, but I'm maximally bullish on energy. I am interested in it. As I've been pitching our research to people across the street, I think there's ample pushback on it. So that's a place that I think is, kind of the triple crown. Positive revisions, positive momentum, cheap valuation versus history. So that, given so many people can't own it, I was on CNBC a couple of weeks ago. People said all this money in ESG, they can't own it. I just think more for me, demand growth exceeds supply growth, and nobody can own it. And it's got the triple crown, momentum, revisions, and valuation. That's where you want to be. That's going to be the top performing sector still, even though it's already been great for the next 6 months.
Shepard Smith here. Thanks for watching CNBC on YouTube.